Well, almost half of all venture-backed technology and healthcare companies did business with Silicon Valley Bank in 2022, and its collapse could send ripple effects across the industry. Here to talk a little bit more about that, let's bring in Dan Ives. He's Wedbush Managing Director and Senior Equity Analyst here. Dan, it's great to have you. So let's talk about those ripple effects here, because in your recent note, you call it SVB the, quote, godfather, bedrock of Silicon Valley. What's the impact then? It must be large.
I think it's significant in terms of the ripple effect, because this is really going to constrain financial conditions within startups, even on some of the late stage. And no longer with SVB, with this black eye collapse, I believe it's going to accelerate M&A, and it's going to have clear winners and losers. I think big tech's probably a winner in terms of from an M&A perspective, but clearly there's some darker days ahead with the daddy warbucks of Silicon Valley banking gone.
What about some of the losers, Dan?
Well, I think losers are clearly on the startup side. Some of those that, high cash burn, can't get funding from some of these other banks. I think when you look at ones that are heavily exposed on the tech side, I mean, you look at some of these names like a Twilio, a Hubs, you look at GitLab, what happened last night, Atlassian. I think that's sort of the next potential shoe to drop in terms of end market. Those focus on the tech community. And I think that's what investors are now trying to figure out in terms of, the ripple effects here. And I believe for years to come, this is going to be something that will impact the 408 area code.
Wow, for years to come. Dan, let's talk about how this could also impact M&A when so many of these companies struggling to get financing, struggling here in terms of how they are going to grow. Is this going to increase M&A, and by how much?
We believe it's going to increase M&A at least by 20%. I mean, I think even you're starting to see some funding, changes in terms of, I think there's some companies that might just rip the Band-Aid off, go down the IPO route, and even take valuation haircuts. But I believe big tech, they're sort of right now sharpening their pencils, because there's a lot of companies that if you can't get those lines of credit from an SVB, you're going to have much more scrutiny in just this environment that we're seeing. I think it's going to be a bonanza of M&A that ultimately comes out of this over the next 6-12 months in tech.
And you mentioned IPOs briefly, but really was on fire in 21, almost dried up entirely in 22. What's the impact in 23 as we move forward in terms of the IPO market?
I think you're going to need, obviously the first that needs to come out, and you'll see some valuation haircuts and nervousness. But I do believe, especially with the Fed right now, basically handcuffed in terms of, let's call it 25 bips, and then they're going to have to pause, just given SVB and what we're seeing on the banking side. You'll start to see what I believe on tech and some of these other verticals. You start to see some of the, probably the best of the best come out from an IPO perspective, because funding, that's the key, right? And I think you're starting to see changes in funding, which I think is going to catalyze some to go down that route.
Dan, when we talk about some of the uncertainty out there within tech, I think a lot of investors are looking at tech, trying to figure out those winners and losers. I know you mentioned some of those losers. Outside, though, of that very specific space, should we be at all worried about some of these social media players, some of the other larger names within the industry, or no?
Look, I think some of the digital advertising headwinds are starting to abate. You see Zuckerberg finally reading the room, continuing to cut costs. It's 180-degree sort of change there. And I think as these companies cut costs, all of a sudden you're starting to see these stocks move significantly higher, because investors like what they see. That's ultimately what creates the next cycle. I think valuations are reflecting a lot of bad news, and I think there's going to be a clear sort of winners and losers playing out. But so far, if you look at this, tech's held up a lot better than anyone expected. SVP specifically is going to hurt more the startups and some of the end users, toward tech. But I think that's what really starting to play out here in terms of this Game of Thrones.
Clear winners and losers among your March Madness teams as well, Dan. North Carolina fails to make the tournament from #1 in the country, but Penn State, a solid 7 seed, winner or loser getting that 10 draw against Texas A&M?
Look, I think, A&M probably should have been a 5 seed in my opinion, but I do believe Penn State ultimately wins that game Thursday night at 10 o'clock. And then versus that Longhorns. I think it's going to be a tough, but ultimately in the Sweet 16. That's my big upside. I do believe Penn State goes there. Like UCLA, and of course, I like my boy Edie on Purdue to go far.
Oh, the Big Ten. They have a 23-year title drought. Be interesting to see if Penn State can hold on to Coach Shrews, though. A lot of teams going to come calling.
Oh, I think we'll hold on to him.
I think you're right. I think they need to pay that man. Dan Ives, Wedbush, good to see you, sir.